Jesus.
S&P 500 program trade buy level 1.
It's your wake-up call, pal. Go to work.
All right, this is going to be a super fast podcast. I'll keep it under a few minutes. In fact, I just wanted to bring up a new contract, a new set of contracts that are about to be released mid-August. They're going to be released, the micro Treasury yield futures from the CME. Those of you that have done my DOM trading masterclass or even some of the spread trading stuff that we do will find this particularly exciting, I think. If you've been trading, or if you've just been trading Treasury futures, or have a little bit of an interest in Treasury futures but thought it was all too complex and all that kind of stuff, I think these contracts will be really, really interesting. It's a bit like the micro equity contracts, the S&P and the Russell, which I think are two great markets to trade because of the tick size. They can not only be very forgiving if you're wrong, but also offer a whole range of extra strategies, various market making strategies, averaging in strategies, and spread relative value type trades. And you can place those trades without risking a heck of a lot, or be able to hold trades a little bit longer because of the tick size. The same goes with these new contracts. They're based off a $1 tick size, and that works out to be about 1/10 of a basis point, which is quite different from the existing Treasury futures contracts. At the moment, the Treasury futures contracts cover the 2-year, the 3-year, the 5-year, the 10-year, the ultra 10-year, the T-bond and the ultra T-bond, or the ultra 30-year, as it's called. And what tends to happen with those contracts is that they are essentially full-size contracts, and the volatility out the longer end in the T-bond and the ultra bond is quite high. And as such, they're not really great contracts for those relatively new to trading, or those that don't have a decent bankroll to put into it. Along come these micro contracts. They are a tiny fraction of the size. They are cash settled contracts. They will be based on what they call the on-the-run security, or the most recently issued security for that time period, be it the 2s, 5s, 10s, or 30s. Which is a little bit different from the current futures contract, which tends to follow the cheapest to deliver security. For those of you that don't know what that means, it won't mean a heck of a lot for, say, the 5-year contract, but it will mean quite a different dynamic when it comes to the further out in the yield curve. If we say, the 30-year contract, for example, the on-the-run security is quite different from the cheapest to deliver security, or tends to be, and it is right now. So in a way, you will have two 30-year contracts, but they'll have their own little personality. A bit like, let me think, another contract, Brent versus West Texas Intermediate. They're both crude oil contracts, but they have their own little, they have their high correlation, but they have their own little personality, if you like. It's going to be the same in these long end yield contracts, which would be really interesting if you're scalping, if you're relative trading, relative value trading, I should say, spreading, that kind of thing. So it's going to be the contract size will be priced as a DV01 of $10, and the tick size will be 1/10 of that, so $1 tick size, and that's for every contract. So it'll be really interesting to see. If it develops into a good contract, I think it'll be a really good contract for retail traders and small traders, and I hope it really takes off. It'll change the way we look at some of the things in my DOM Masterclass, which will only be really exciting, I think, because it'll open up some more strategies. But that's something to just look out for. As I said, it's not launched yet, so I can't talk about, I don't have much else to say about it other than what the CME have announced. So stay tuned. We'll cover it more once it's released. Meanwhile, I'd probably, if you think of it, just send an email to your broker and say, look, I want to trade these things. Will you have them available from day one? And just hassle them about it, because some brokers kind of or clearing members take a wait and see approach with some of these new contracts, and that can be really bloody annoying. But anyway, that's something to check out. Listen, if you are listening to this one and you're wondering what the heck I'm talking about with some of these bond trading terms. Take a look at my other podcasts on treasuries. I've got one on ultras and one on the treasuries in general. They're the two most popular downloads, I think, for my podcast series. So it'll all make sense once you listen to those. And if you have a question, of course, hit me up and we'll speak soon. Trade well.